Following is my conversation with Panagiotis Kriaris, a leading expert on FinTech, the future of banking, and the future of money, and commercial director at Unzer. We will talk about central bank digital currencies, CBDCs, and how they impact the future of money and our lives. Hello, Panagiotis. Thank you very much for having you. Would you agree with a thesis that emerging markets are ahead of established markets in terms of digital payments innovation?
I would say that we can find many emerging markets, particularly in Asia and in Africa, that have been evolving in a very fast way. So in many aspects, this is true, but I would say that it makes a lot of sense to drill down and understand the individual markets. I mean, if we talk about Asia, if you talk about China, you find different features. For example, if you talk about Africa, right? But in many cases, it's true, and it's interesting to understand the reasons behind in the evolution.
How would you describe, in general, Chinese system of digital payments and how it evolved?
I mean, I find it very interesting. So I think the evolution is a very, very interesting one. So if you look at what has been happening, I think in a few years' time, they have evolved from a cash-based economy and society to a digital one. And actually, not only a digital one, but they are a front runner in terms of this digital evolution. And I think it makes a lot of sense to understand how this has been evolving, why. So I think that's probably a good discussion to have today. So maybe if we start looking at this, I think we need to go back to the beginning of the century, to the 2000s. So back then, the e-commerce space in China was, let's say, in its infancy, right? So it was basically a cash-based economy, and they were trying to develop e-commerce. So back then, you have a company called Taobao, which is part of Alibaba. So this was, let's say, I think this was founded probably in beginning of the 2000s, maybe 2003. So they were practically trying to grow e-commerce, but they had one issue. So one of the issues that they had was that this is as we said before, this is a cash-based society, right? So how do you do payments? How do you facilitate payments? And in China, as in other markets, but particularly in China, there was a trust gap or a trust issue between sellers and buyers. And basically what they did to address this topic was that they introduced Alipay. We know Alipay as of today, so it's a huge super app. But back at the time, Alipay started as basically an escrow account that it would withhold funds so that the buyer can receive the goods and then they would release the funds. So that was basically the original idea. And it was a very clever one at the time because it was, as I said before, it was bridging the gap between sellers and buyers. Now, if you add on top let's say if you add on top some other functionalities like the credit scoring, facilitating the buyers and sellers, because essentially Taobao was a marketplace. Then, so if you add all these things and the functionalities together, and the data side, meaning that they were getting additional data, so building on the data on top, so the more services they were offering, the more data they were collecting. And based on this data, they were using this data to kind of customize services and offer additional services to businesses and to consumers. So we are essentially talking about the B2B and the B2C ecosystem evolving into what we know today. So today, Taobao is a huge marketplace in China, is the leading marketplace in China. You have Alipay, which is a super app. So it's the biggest one in the globe with 1.3 billion active users annually. So even if you think about the number, is quite impressive. So this has been, let's say, one side of the evolution. So this is one, let's say, the one super app that we are that we have in China. And then you have the other one. So then if you go to the other side, you have the second one, which is called, so you have Tencent, right? So it's a huge technology conglomerate in China. So these guys, they were, I think in 2011, they founded what we now know as WeChat Pay. WeChat, actually, not WeChat Pay. So this is, let's say, a messaging app. So this is, for me, a bit the other side of the coin in terms of how the e-commerce growth has triggered, in general, this change that we have been seeing over the past years in China. So what has essentially happened with WeChat is that so the messaging app was the basis for offering a payments tool to merchants to accept payments. Because one thing that we need to take into account is that back then, as we said, this was a cash-based society. They were not using credit cards. And actually, the merchants were very much cautious in terms of the pricing, right? They wanted to be competitive. So the charges that we know in the West of credit cards, they were too high on the one
Up
hand
to
side.
3% in the US.
Exactly. That was the one issue. And the other one was the infrastructure. So to run the POS devices on the merchant side, you need the cost, you need connectivity, you need all these kind of issues, you need the cost of the device. So this was something that the merchants, they didn't want to do. They didn't want to accept the costs. And what was the solution? So the solution was that they were essentially building on top of a messaging app, WeChat Pay, and on top of an old technology, which is called QR codes. So imagine what they would do. So they would print out a QR code. You would have the consumer coming into the store, and they would, let's say, with the app, call the QR code, and that was it. And the additional benefit of this was that there were no costs. So there were no costs for a POS device. The merchants, they didn't have to have any connectivity because this is working. I mean, it's essentially enough if you have one side being connected to the internet, which was the consumer. And because this was a peer-to-peer payment, there were no fees, essentially, even for the for B2B cases beyond the B2C transactions. So if you put all this together, you have, let's say, the two big pieces of the puzzle. On the one hand side, you have WeChat Pay, which has become a super app in itself, right? So they have close to 1 billion users in China as of today. And on the other hand side, you have the Alibaba ecosystem. So you have actually two ecosystems that were actually so the Chinese growth and the evolution was built on top of these two ecosystems, if we may say it.
So Chinese are now pushing very much for cashless solutions. And the main argument is that this is providing banking for the unbanked and for introducing the poor into the banking system. Is it really the main reason, or there are other concealed reasons for this policy?
It's a good point, and before I answer the question, I think it makes sense for us to go one step back and connect it to the previous point. So the reason why China has been so successful in making this transition based on these two private, let's say, ecosystems, I think there are two main pillars why this was the case. The first one was the high mobile phone penetration. Everybody has a mobile phone. And the second one is the high bank account ownership. So almost everyone in China, they had a bank account. And this was the let's say the main driver. The combination of this was the main driver. Because imagine you have a mobile phone, in your mobile phone, you have an app. The app is connected you have a wallet, and the wallet is funded from a bank account. So essentially, all these things, they are binding together. Now, the reason why they are driving, let's say, or why they have been driving the cashless society, I mean, as I said before, at the beginning, it was about enabling growth and putting, let's say, more people in the ecosystem, enabling them to buy. And this was something that was developing and happening over the years. It took them kind of, let's say, a decade to develop all this stuff. Now, I would say that the cashless idea has two main drivers behind. The first one is about the growth of the economy as a whole, right? Because the cashless economy doesn't have the burden of the banknotes. You don't have the costs associated with this, and of course, this is a huge boost, as we have seen over the past years, for the economy as a whole. And because of the population that we have in China, having these impressive growth rates on a yearly basis, I mean, they used to have close to 10% or 7 or 8% some years ago. So that's behind the, let's say, the financial miracle that we have seen happening in China over the past years. So that's the one pillar. And the second pillar, I think, is also having a political connection. So it's control. As we have seen in COVID, this is a one-party state, it's a one-party economy. And if you have, of course, you can understand that a cashless society and an economy is much easier to control and guide versus one that is based on cash, right? So these are, I would say, the two main drivers. And going back to the point that you mentioned around the kind of bringing more people off the informal economy to the formal economy, I would say that this is part of the growth story.
And fraud prevention, there were, let's say,
yeah. So I mean, fraud. Let's say, let's not fraud. So corruption is a big topic in China, right? I mean, also over the past years, there has been a refocus in fighting corruption, etc., etc. So I guess this is also, I mean, the idea of fighting fraud and making things more cost efficient at the end of the day is also, I would say, part of the story driving this.
What is central bank digital currency?
Interesting. So just to make a connection with the central bank digital currencies. So China is a front runner in the central bank digital currencies story. And that has been, so this is, let's say this is an evolution of the past few years' time. So if you go back 5 or 6 years ago, I don't think that you're gonna find practically anybody focusing on this topic. So this topic came into focus because of the digitization, because of the, let's say, the popularity of cryptocurrencies, and because of central banks being afraid to lose control over the financial system against other players. Essentially, a central bank digital currency is digital money sitting with central banks, with the main difference that let's say the consumers, they have a direct claim to the central bank. And we have many models for central bank digital currencies, but I think at this stage it makes it's important noticing that all this discussion around central bank digital currencies is mainly referring to the retail side, because there is also a wholesale side of central bank digital currencies. And as I said before, China has been a front runner in terms of developing a central bank digital currency. I would say they are the most advanced in the planet. Most of the central banks, as we speak, over 90%, they are pursuing one way or the other a form, or they have a pilot, or they have a project on central bank digital currency. The reasons I mentioned are the reasons are what I mentioned before. But China is the only one who has, not the only one, is one of the few that have piloted this. I think they have a pilot that is running today in more than 25 countries. I think they have 260 millions of wallets, because of course you need a wallet to be able to connect this to the digital currency, to the digital one. So they're very, very advanced. Even though I have to say the adoption rate is quite low, but this is also kind of I mean, the state is also trying to prop it up, I would say. So going back to our previous discussion, I would say that one of the reasons, or one of the main reasons why China has been trying to be a front runner in central bank digital currencies is because of the fact that these two giants that we have seen evolving in China over the past many years, they have a lot of influence, but it's influence coming from private parties, private companies. And as you can imagine, in a system like the one that China is having, this is not very very much liked from the political setup. So having a system that can be controlled from the central bank, which in turn is controlled by the party in the establishment, is, I would say, an effort for them to kind of reduce the power of these very big companies that have come to dominate the economy in China, and also increase the influence of the state going forward.
Most central banks over the world are taking Chinese experiences into account when creating their own digital currencies. Having said that in China, CBDC is also an element of control over the citizens and over businesses. Are we to be afraid of CBDC in the West?
No, I don't think we have to be afraid. Actually, CBDC, as with all things, you can use something in a good way, and you can of course use something in a bad way. I think CBDCs are a development in the course of the history of money. But to be honest, I don't think that CBDCs are moving as fast as we would like to think. Right? Of course, we have, as I said before, over 90% of central banks around the globe experimenting with CBDCs. It's also, there is a competition element as well. So there is a fear of staying behind. So if everybody else is pursuing something that is in the cutting edge of innovation, and you are the only one who doesn't, then imagine, I mean, I can imagine that you have a problem. So that's part of the reason. And the other thing is that despite despite the progress, despite what we are seeing now in China, as I mentioned before, the numbers with a pilot, this is not something that will happen from one day to the other, right? For example, in Euro, there is a discussion, of course, for a CBDC. We call it the digital euro, as you very well know. So there will be announcements made very soon. There will be decisions, but this is even if there is a decision to take this forward, again, this is not going to happen from one day to the other. Implementation will go through several waves, and it's going to take years until you have something that you can actually use all over the European Union, for example, right? The same goes for China. So they have to combat with with low adoption rates. And we have to see when this will be. I mean, they have, of course, several use cases in public transportation, in public life in general. But it's a very big question how you go from a pilot to a full scale deployment. And here you have several questions to answer that are also touching on major issues of how the economy is structured. So imagine that if you have a central a direct claim on the central bank, why would somebody deposit still money with the commercial banks, right? And if this is the case, if they don't have any deposits, how they are going to be sustainable in terms of financing the economy. So, I mean,
How much CBDC is a threat to commercial banks?
not necessarily, because in most of the structures, you're gonna find that commercial banks are part of the system, right? So in most of the cases, commercial banks are, let's say, disseminating the CBDCs to the public. But there is a discussion to be had in terms of how do you answer all these questions around CBDCs? How do you make this viable? And of course, as I said before, it's about a new financial setup, is a restructuring of the economy as a whole. So there are many things to be answered. What is the role of the central bank? What is the role of the commercial banks? How do you incentivize consumers to use it? How is this influencing the role of these various players? How is the new value chain? And at the end of the day, how is the economy again readjusted to come to terms with this new reality? So I think that's an evolutionary process that we need to see, and there are many questions that have to be answered. Doesn't necessarily mean that everybody will give the same answer to the questions. I mean, I think that we're going to have different models developing across the globe, and I can imagine that China, for example, is gonna can adopt a different way than what we probably will do in the Eurozone. And then, of course, there is a discussion, okay, once you have these new, let's say, models in place, how do you foster the collaboration across borders? So what is happening? So if I have let's say, a digital currency that is in the EU, how can this work together with other digital currencies? So there is a discussion about cross-border interoperability taking place at the moment as well. So many parameters that you need to consider here. So it's not something that can be easily answered.
The last issue you mentioned, I think, is very important, because this CBDC is a promise of cutting very much costs of international transactions.
I would say so. One of the big promises that CBDCs can offer is to improve the efficiency of cross-border transactions and payments, which are notoriously less efficient than what we have seen is happening in domestic payments, right? So that's one of the big, let's say, one of the big potential areas, but it's also one of the big question marks. How do you do this, and how do you have everybody working together and the systems talking to each other?
Do you expect CBDCs to be adopted earlier in developing countries? Because it seems to me that this is a big chance for them, for banking the unbanked, for developing small medium enterprises.
I would say that you have a bigger incentive in developing countries to mitigate some of the problems, and maybe CBDCs can be an option for this. So if you don't have an established setup that is working well, as we have seen in developed economies, maybe that's a solution. But on the other hand, as I said before, I think it takes it requires a rather longer learning curve. So to go from A to B, right? To go from design to implementation, decision making, and then to going live. So it may well be the case. Of course, it requires resources, which have to be directed from other players. It requires from other places. It requires redesign, lots of political decisions, included. So it's not only an economic matter. So can very well be the case, but there are so many parameters that it's not easy to answer. And of course, one developing country can be very different from another one. So in this sense, I would say it very much depends on the geographies and on the specifics.
And the very last question: what is your take on possibility of Chinese payments model, which is basically without intermediaries, like credit card processors, to extend into Western markets, extending into Europe, for instance? Is it possible?
Two things. Now, the first one, I'm not sure how many are aware, but we have, let's say, I think there are two legs to this answer. Now, the first one is that we have the Chinese payment model expanding into other countries in the sense of allowing people to pay by the same means. And this is mostly concerning, let's say, Chinese people, for example, that are going abroad. For example, you have Alipay Plus, which is essentially facilitating merchants to accept payments and to work with all these online wallets that you find in Asia, right? So the Chinese tourists are famously the big spenders when it comes to the global consumption. I think in terms of the luxury segment, they are very, very I mean, they are the one driving the consumption on the luxury segment. So when they go abroad, there are quite many, as you can imagine. It's very important that they have the option of paying with their, let's say, domestic wallets that they're using in the country, because it's not easy to use credit cards, for example, that we have in the West. So this is Alipay. So this is the one side. So this is kind of the side of enabling or bringing, let's say, to other countries via one setup. So Alipay Plus has incorporated all these wallets in Asia, and I think they're going to be growing this offering. So that's a very interesting development. Now, on the other hand side, if we look at the model, because you have been addressing, let's say, if we can have something like this, I don't think that we can take what has been happening in China and bring it one-to-one to the West. Having said that, though, I think we are seeing a couple of different plays evolving at the moment. Now we have some players that are fighting for the super app to become the super app of the West. So you have, let's say, Apple in the game, you have PayPal in the game, you have other companies that are trying to become similar to Alipay and WeChat Pay. But I don't think that you can compare this with one-to-one with what is happening in China, because then you're gonna see that it's very, very far away for different reasons. So that's one, let's say, game and play that is under development. The second one is that, for example, you also have in Europe an additional kind of game that is happening on the policy side and on the infrastructure side. So you have this initiative called the European Payments Initiative, which is basically an effort, and it's not the first one, from Europe to have its own payment rails and infrastructure that will be competing head to head with the likes of Visa and MasterCard, which are based in the US. Now, I mean, again, this is a big discussion. There have been some developments happening lately in terms of EPI making some acquisitions within Europe so that they can be the basis for growth. Remains to be seen how this will run. But what I'm trying to say is that we have many developments going in the same direction. So the model of China is not going to be transferred one-to-one, but all this approach, the model around ecosystem, around digital wallets, around digital payments, I think it's already here, and there is a battle taking place on several fronts.
That's very, very interesting. Panagiotis, thank you so much for this discussion. It was fantastic, to hear somebody a little bit cooling off the mode about CBDCs that everybody says are taking over only tomorrow. And as you said, this is some more complicated issue and probably some more time to go. And I think it was very informative and very, very beneficial for all of us. Thank you very much.
Thank you for the privilege. It was a pleasure. Thank you.
Thank you so much for listening to Sherpa Search on Tech. If you have enjoyed the show, please subscribe to our show wherever you listen. Thanks again. The Sherpa Search on Tech podcast is a production of Sherpa Search, an executive search firm specializing in the tech industry, helping hire the right people for expert and managerial positions, and advising how to build and develop long-lasting, high-performing IT teams. If you would like to learn more, reach out to us at maciej.szczerba@sherpasearch.tech or visit our website sherpasearch.tech. See you next time.